we can lend to them or provide other services beyond lending, because the likes of MTN, that's not their business. They don't want to lend. We want to lend. We want to also provide other services, whether it's credit reports, fixed savings, etc. So it's actually an exciting opportunity. We are actually excited about it. We think that it will adversely impact the commercial banks and their ability to store money. So I think about less than 90% of Nigerians have up to 500,000 naira. So if you can store your money in a mobile wallet, or in this payment services bank, just like you see in Kenya or the Ghanas and Cote d'Ivoire with mobile money, we would expect that unless the banks start providing value-added services to their retail customers right now, there will be a net exodus towards these payment service banks, where we will be happily waiting to partner with them and provide services to them.
It's funny, we were talking about Joshua Oigara a little bit earlier before we started recording, and about how KCB, Kenya Commercial Bank, has what is essentially a very symbiotic relationship with Safaricom.
Yeah.
And they've done very well out of that relationship. The lender has piggybacked on what telecoms companies are very good, which is having a terrific front office. They're very good with managing millions of customers. Maybe they're not so good at KYC and doing a heavy lifting of lending. So it does seem like an interesting partnership.
Yeah, I think the opportunity is huge. I think you may have a few pitfalls. I mean, before you had the KCB Safaricom or CBA Safaricom, you had Equity Bank Safaricom, and maybe it was a clash of egos or clash of two giants. So,
excuse me, est-ce qu'on aura besoin de vos photos de ce monsieur ou pas?
Oui, c'est une très bonne idée. Je te fais signe. Merci.
Sorry.
No worries.
It's our in-house photographer.
Oh, okay. So before you had the Safaricom, KCB or Safaricom CBA, you had Safaricom Equity Bank, which didn't work out too well. So I suspect that we may have that scenario where the exciting collaborations or partnerships in the interim not well thought through, but eventually I think if parties recognize the opportunity, recognize their own strengths and weaknesses, I think we could see an explosion in services to the underserved in Nigeria.
There might be some other headwinds if, for example, let me back up a bit. SimplePay, a Nigerian fintech provider, which closed, sometime at the end of 2018.
Right.
And there are various, rumors swirling around, which we won't go into, about, fraud that was done using SimplePay, etc. It's super unclear what exactly is happening. But there is a risk, is there not, that there is some kind of big fraud perpetuated using some kind of fintech, and the central bank says this has got to stop, comes down with a regulation which really hurts fintech players.
So I think it's a very important point. We're regulated by the Central Bank of Nigeria. We're audited every year, but we do recognize that the fear we have is not so much competition or lack of capital, is that there are unregulated entities that come in that fly on the radar of the central bank and give everyone a bad name, and there's a risk that central bank comes and is a bit reactive and spoils the operating environment. So it's something that we think about every day. I think I read recently that there is either was a draft regulation or pronouncement that there's going to be some sort of body in the Central Bank of Nigeria supervising fintechs in particular. I think it's early days yet. We haven't seen what that's going to be like.
That would be an interesting and progressive step forward for the central bank.
It will be progressive. I mean, my concern, without having seen anything, is that fintech is broad. And when we talk about fintech, typically we're alluding to payment companies or lending companies. But clearly there's a broad remit, whether it's in terms of cryptocurrency, insurance, etc. And so what will be interesting will be to see who that law is targeting and what it actually says. But we do welcome regulation as long as it's appropriate. I've heard talk about the regulatory sandbox, which would be amazing.
Like they have in Mauritius.
Exactly, they have Mauritius. I think there's talk of it in Egypt as well. So we welcome those interventions.
Just for our listeners, what would a regulatory sandbox do?
So it would. So your typical regulators, traditionally is you want to do something new, they say no, because they don't understand it, because they don't understand the impact. So regulatory sandbox would allow fintechs and other players in the industry to test out new innovative products that maybe don't fall under any regulation, but so the central bank actually being proactive in saying, I don't know what this will look like, but let's actually work together, engage, and see if this will add value to the ecosystem. I think a great example for it would be in the case where I think crowdfunding is not allowed in Nigeria right now, regulatory.
Really? I thought Farm Crowdy has a sort of a crowdfunding aspect to it.
It does have an aspect. I don't think it's. I don't think it's under the law.
Right.
I think it's ambiguous.
I don't want to get my friends at Farm Crowdy into trouble.
Right. And I'm a bit conscious of that. But I think there are various aspects of. So I think what has happened historically is the regulators, if they see that this activity is actually beneficial to the ecosystem, they turn a blind eye to it. So you do have a few companies where payment is done using airtime. Now, strictly speaking, that is against the law. But to the extent that it helps bring people into the, they're brought into the financial sphere, the central bank turns a blind eye to it. So those are two examples, crowdfunding, payments with airtime, where the regulatory sandbox would be a great, system to say, let's just test these out, see what the impact is, see what the drawbacks are, before we actually now come out with regulation, after consultation with the other members of the ecosystem.
That's interesting. I mean, there are increasing critiques happening at the moment in Kenya about, for example, gambling companies or slightly under the radar fintech operators who are lending without doing much KYC at all.
Yeah.
That is the risk, I imagine.
It's a risk, but I think one of the things I think we also need to do is look broadly at what happens across the world. So unfortunately we're in an environment where we charge high rates, for example, and there's always a moment of shock horror when we're discussing rates with potential investors or regulators. But if you take this case of the UK, for example, where high level of financial inclusion, the maximum interest rate applicable is 24% a month. Now, when you think about the UK, great credit reporting system, low inflation, great infrastructure from banking, if they are saying, despite all of these advantages we have, the maximum interest rate that's allowed is 24%, then when you come to our part of the world where you've got double-digit inflation, government borrowing at high double digits, very uncertain environment, very nascent credit bureau infrastructure, it becomes difficult to stomach when central banks, even in Kenya, are saying, let's cap these interest rates for understandable reasons, because we don't want to take advantage of the retail customers. But we need to be very cognizant of the environment in which we are working and the cost. End of the day, I'm a big believer in letting the market bring interest rates down through competition, through efficiency, and through borrowers or customers saying, I'm going to go to X because they've got the best service, and yes, whereas the rates are Y, whereas the rates may be very high, I like their services. It gives me certainty of cash or payment, etc. So as long as the customer is not being gouged and fair competition is allowed to continue, I think things like interest rates, will come down. And I don't think yes, the regulator should step in where there's gouging, but I think we should look at the international comparables before setting it at what I believe sometimes are artificially low rates. Because ultimately what will happen is people will stop lending to customers.
And they've pushed it to the loan sharks
Exactly.
or what have you.
Exactly.
What is your secret sauce when it comes to assessing customer risk?
Yeah. So, our view is this. So the process we have right now is customer downloads the app, they give us permission to access their data on their phone, and they also fill out an application form. And using all that data and some machine learning algorithms, we make an assessment as to what we think the customer can pay, and we make her an offer. And then through that relationship, we see how she pays back, and how she uses other parts of our platform. Does she save on our platform? Does she make certain payments? And so through that, we're constantly building a credit assessment of her. Now, our view is that there are two issues. There's the willingness to pay and the ability to pay. The willingness to pay, you can only ever find out by making that loan.
Yeah.
The ability to pay is something that we think is a continuous engagement. Whereas many parties who will say we use 5,000 variables to make an assessment. I think this kind of face-to-face discussion is the best way to assess whether a person can pay. Now, the difficulty is that you cannot do that at scale. You can't do that, in a manner that we want to do. So you make an assessment, and then you try and refine that over time, which is what we do.
Do you have a sort of a maximum initial borrow so that you see whether they at least pay back that first loan?
Yeah, so our loans go from anything from, in Naira, the equivalent of $3 to about $600. And then we make those assessments based on, the information you give us, how believable we think what you're saying is, and even if you're telling the truth, we try and make sure that we don't overburden you with any debt.
But you do all this by the information that they give you over the internet?
Correct. By the information, we also take information from the credit bureaus in real time, and then we also have other data sources that we use to make that assessment.
Because I guess that's where the telecoms companies have a huge advantage, because they have access to customer behavior.
So I think the ideal scenario is when everyone brings their data together. So if I'm an MTN customer, for example, so you can make an assessment of me based on the amount of data that I use on MTN, or the calls I make, or the fact that you saw my phone was used in the UK. But at the end of the day, that's only one piece of information. I might have another tessellate line where I use a lot more. So if you make the assessment just based on the MTN data, you'll come to a conclusion that may be wrong. And so that's why the real opportunity is in different companies collaborating with the permission of the customer, because that's when you get a complete information. So if I have, for example, a customer who is making payments on our platform, and I make an assessment about her income, her expenditure profile, I get to one conclusion. If she allows me to access the credit bureau data on her, allows me to access her information with the telcos, I start building a robust picture. And I think that's where we're trying to get to. In the UK, you have open data standards where by law the customer has the ability to, and the banks are obliged to share data on their customers with third parties with the customer's permission. And when you have that scenario, that's when you have the best services and products for the customer. And so there's an opportunity for that to happen, but it takes collaboration, it takes potentially some regulatory intervention, and customer acceptance.
If let's just assume for a sec that the Central Bank of Nigeria doesn't help you out by doing that, it again makes MTN the sort of the belle of the ball, because we're talking about Safaricom. they know through their mobile money transfers that a particular trader has paid them back in the past.
Right.
Every